one of my favorite lenders, Joe Jamieson from Florida Advantage Mortgage, and I've got questions on my mind about all the abbreviations in lending, right? So, for example, what is a HELOC?
HELOC stands for Home Equity Line of Credit. And what that means in English is basically using your house as leverage to purchase either another house, to make improvements, to put cash in your pocket, to go on a cruise. There's all kinds of different things you can do with that equity that's in your home.
So if you own a house and you've got equity, and a lot of people have equity today in their home, could they potentially take out a HELOC to put as a down payment on a house to secure that if they're building their wealth with real estate?
Absolutely.
Awesome. So there's no penalty on that or anything, right?
Oh, no penalty for using your HELOC or using your own equity in your own home as leverage to go build your portfolio later on.
Okay. So I got another one that confuses people. You ready?
Yeah.
What is PMI when it comes to mortgages?
Wonderful question also. In my world, this is one of those that everybody's heard that they don't want PMI. Well, PMI is private mortgage insurance. So what that does is that PMI covers you from the difference in generally 25 to 30% of the home's value if you were to default. So it's an insurance policy from the lender saying if you were to default that they would cover you in that. The more down payment that you have, the less that PMI is.
So there are your abbreviations: PMI, HELOC. Do you have any other ones that are fun?
The only other one that I would like to bring into this conversation is DTI. That's another one that everybody asks me about.
Okay,
often.
tell me about the DTI.
DTI is debt to income ratio. There's a front end and a back end DTI. Not to get too far down this rabbit hole, the front end DTI is your house payment versus what you make for the month. Can only be in certain thresholds for certain loans. And the back end is your house payment along with all your other bills can be at a certain threshold of a percentage of your total monthly income. So basically what that means is even though you make $5,000 a month, they're going to allow you approximately, $2,000, $2,500 for your front and back threshold.
Right.
So these are just different thresholds where your income has to be in relation to what your housing payment is.
So would it be your advice for somebody that is looking to buy a house to maybe just talk to you about it, and you guys can kind of run that kind of scenario by them to see if their DTI is good, or if they're going to have any PMI?
Yes.
So that in the future they might have a HELOC.
I thoroughly would suggest everybody that's thinking about moving in the next 6 to 8 months should contact a mortgage professional. And that's just to run through the file to make sure that there's no red flags that are standing out there. A lot of people get the idea that they can just start paying some stuff on their credit card off and that's going to help get their DTI. Some things are weighted differently and some things are more important than others. So I would much rather a local lender to look through that file and make sure, hey, hey, Mr. and Mrs. Smith, pay this off first. It's going to hit harder than this one here. This one here's got $100,000 limit on it or loan out there on it. This one has $5,000. We get rid of this one, it removes a whole lot more. There's always different ways to skin a cat, and I think that an aerial look from 30,000 feet is much better than, hey, it's time to move. Here's what we got. What can you get?
Gotcha. Thank you so much for joining us, and we appreciate our partnership together.
Thanks,
Look
Cassie.
forward to helping you guys with anything you need in the home mortgage department.